All right, 3 things in 3 minutes. Let's get it. So if your client is shopping for insurance by price, they might be saving money now, but setting themselves up for disaster later. With many insurance policies, if their coverage isn't at least 90% of the true rebuild cost, that extended replacement coverage won't pay out a dime. So here's what most people don't realize. Insurance companies quote rebuild costs at $400 a square foot, but in places like Oakland or Berkeley, Piedmont, Lafayette, Moraga, the real cost to rebuild can be $800 to $1,200 per square foot. That means if the house burns down, the insurance payout might fall hundreds of thousands short. And the buyer won't know until it's too late. This is where you as an agent can provide real value. Encourage your clients to get a true rebuild estimate from a local builder or a trusted insurance advisor. Make sure their coverage is at least 90% of that amount. Otherwise, all the replacement cost in the world won't help them. And no one wants to find this out during the claim. 2, the Fed met this week, and once again, they did not lower rates. But in his press conference, Fed Chairman Jerome Powell made one thing clear. He sees real risks ahead for the US economy, and he's not ready to make a move. Why? Because the Fed is caught in a classic dilemma. Lower rates now, and inflation could flare back up. Keep rates higher, and we risk tipping into a recession. It's that lose-lose situation. No matter what he chooses, someone gets hurt. Think of it like a pressure cooker. Inflation's still hot, but cooling the stove too quickly could crack the whole system. And with the new tariffs pushing prices up and slowing down trade, it's only making the pressure worse. So for now, Federal Reserve Chairman Jerome Powell is staying put, not because he wants to, but because he has no good moves left. Finally, mortgage rates. They ticked up a bit this week. After the US struck a deal with the United Kingdom on trade, stock investors got happy. And remember, what's good for the stock market is usually bad for the bond market, and that pushes mortgage rates higher. Right now, average rates for a 30-year fix are around 6.875, a little higher than what we've seen over the last few weeks. The US is also expected to begin trade talks with China soon, so we'll be watching to see how that affects the markets and rates in the weeks ahead. All right, y'all got this.